So before we go into what I'm doing and how to prepare going forward, no matter what happens, we gotta answer the question, are we in a stock market bubble? The honest answer is, by nearly every measurable aspect, there's just no way to sugarcoat it, the market is trading at historically high valuations. Like 60% of venture capital is now going into AI compared to 40% that went into internet companies in the 90s. Our fear versus greed index is back at greed, and price to sales ratios are back to a number that we haven't seen in decades. But could that just be the result of endless money printing, especially since the dollar has seen its worst year since 1973? Well, even though some theories would say that asset prices aren't up, the dollar's just going down, when you look at the data, as it turns out, that's not exactly true. Like, when you look at the dollar's value over the last 50 years, you're going to notice some pretty crazy swings. For instance, it depreciated from 2002 to 12, and then it appreciated throughout the 2010s, all during a time where the markets went up and down and back up again, effectively showing no correlation between the two whatsoever. Fisher Investments also analyzed this phenomenon going all the way back to the 1970s, when the dollar was taken off the gold standard. And as it turned out, the correlation between the trade-weighted dollar index and the S&P 500 returns is only about 0.15. which is essentially zero. On top of that, they also discovered that global stocks were up 76% of the time, whether the dollar was rising or falling. Of course, that's not to say that the dollar can't have some impact in the stock market short term, but long term, it's shown that the dollar's moves really have zero correlation with the S&P 500's performance long term. But what about inflation? Surely that has to have some effect, right? Well, to a certain degree, yes, inflation can be factored into the price that you pay for a stock. But over the long run, when you really dig into the data, there's no correlation between the amount of money getting printed into the economy and the higher the stock market goes.